join the party. I think it should be sharing. Okay, cool. We're good. All right. So today, obviously overnight run up, great, all of that, great stuff. Now, huge missed opportunity for me. It just messed up, right? And just so everybody else knows that this happens. It happens to everybody. And of course, I'm kicking myself now because this would have been an excellent play. And of course, with hindsight, it's so easy to see it. I just got caught up on the smaller time frame this afternoon, and that led to a failed trade. And not only did it lead to a failed trade, which it's okay, I had a really good morning, but so money-wise, it wasn't the biggest deal. But this would have been insane, and this is probably one of the easier setups to have identified throughout. So the first thing that I want to just identify at the very least would be, okay, so with breakers, okay, let me just make this bigger for everybody. Okay, so with breakers, one takeaway, and of course I would love to have this be like a more interactive thing. It's just the way that I have the streaming set up right now is that I'm not looking at the chat as well, but if you can answer along, that would be great. So one thing that we've spoke about quite a few times with the breaker, not only how to identify them, but also what they tend to stand for, and oftentimes they do kind of foreshadow some sort of structural change. Now, what does that mean? So oftentimes when you see breakers, specifically those breakers when you're looking at a specific range, right? Those breakers tend to tell you that a reversal is near, right? And just the overall concept of a breaker, a previous bullish order block flipped bearish, right? Think of that. I'm sure a lot of you who in the past have traded using other methods and such, when you would hear the previous support, now resistance, right? Or previous resistance, now support, that type of situation. That's a great way to view breakers, in that not only did you have a block of bullish orders that got wiped, but in addition to that, you now have a situation where you're creating an imbalance through, because oftentimes when these breakers do set up, you're going to notice that there's going to be an imbalance through as well. So you're imbalanced in a price range. You had a stack of orders that needed filling in a certain specific area, right, where the breaker or the bullish order block would have occurred. So not only are you filling those orders, but on top of it, you're making a bullish order block. A bearish imbalance through it, right? So now price is imbalanced in this range after just having a fat stack of orders in that area in one direction, right? So with the gravity of that situation, you notice that these levels tend to offer you pretty powerful, and not only powerful, but they also set you up for some sort of structural flip, if you will, right? And that's what we saw today. Now, again, it is always easy. Well, maybe not always, but when you get good at this, or when you kind of feel like you're getting good at it, you're going to start to notice that when you go back in time and you look at this, it becomes very, very easy, right? Hindsight is 20/20. But not only because of the specific move per se, but also because you see how perfectly it's respecting certain setups or PD arrays, whatever ICT wants to call them, right? And in this case, it's a bearish breaker in addition to a bearish imbalance, right? So I hear the Discord thing ticking, so I'm going to just pull up the chat for a second. Let's see. Sorry. I just want to make sure I'm not going too fast if anybody had any question. Great.
Mando, can you hear me?
Yeah, what's up, man?
Pistero said, for this setup, it looks like there was an inversion fair value gap that formed on the 4-hour that would have given even more confirmation for the short that we seen today.
Right. No. So, and I actually just got off a call with Pistolero. So with that, we were talking about before on how we can really what makes a good setup, what makes an even better setup, what makes a great setup, what makes the, in terms of probability, what's a highly probable, what's an extremely highly probability, what do we feel the most confident in, right? And obviously we want to trade setups that we feel pretty confident in. And when you get overlap like this, so for example, Pistol brought up the 4-hour inversion, right? I bet you he's correct. Ready? Let's pull it up. 4-hour inversion fair value gap. Okay. Solid, right? You inverted this, not only this gap up, but also this right here, right? Check. Okay. So that's one. You have the hourly bearish fair value gap right here. Great. And to me, in this situation, what sticks out the most, because, of course, you could say, well, Mando, if you showed us that odd NAM, which I'm going to make a video of, that's just the inverse Mando model. At what point do we feel confident that we're going to get that retracement down to 50%? Now, of course, that doesn't necessarily have as high of a ceiling as what the Mando model itself would have, due to the fact that we're essentially looking to max out probably around this 50% range, right? That's really the max we're going to get on this trade. Could we look lower? For sure, but ultimately, really where we're targeting is discount, because anything goes at discount, right? Especially if you have an imbalance there. And again, I'm going to make that video for you guys. But the breaker in itself, to me, put this over the top, and I'm really kicking myself because it just wasn't something that I was even paying attention to, unfortunately. I knew that we were forming an hourly imbalance. I was fixated on the 15-minute. And what was I fixated on? I'm sorry, on the 5-minute, like an idiot. And what was I fixated on the 5-minute? Oh, shoot. I meant to leave that up here. Hold on. This is my alert. No. Come on. Why is this not? Hold on. Sorry.
Hit control C. It'll
Bad
undo what it
radio. Yeah, it just was not doing what I wanted it to do. There it is. Okay. I just want to have that just in case we get an opportunity for a continuation move lower. But anyways, but here, this is really where I got fixated on it, because I made money on this move to the upside, and ultimately it turned out to be, I don't want to say the demise, because I had a really good day. I'm sure a lot of people would kill for the day I had, but this is where I got screwed, and it just turned out it sucked as a result of this. But this is what I was looking at on a smaller time frame. I wasn't so sure that we were done yet to the upside, where the imbalance should have told me, Mando, we're done. We're going to retrace a little bit. That's one. I'm looking at a lot of other names. I'm having alerts go off left and right. Pistolero can echo this. I opened up a new tab and 400 alerts came in because I had discount marked on so many names, right? And the imbalance is in discount on Tesla, Google. There's a bunch more. I'm just forgetting. Coin was another one. Whatever. You get the point. There was a lot of discounts going off, and I was still thinking to myself, I'm not so sure this is necessarily done, which turned out to be really stupid, and I should have just trusted what I was seeing on a higher time frame. But I decided to be stubborn and stick to a lower time frame, and I saw that we did have a 5-minute bullish breaker, right? You have your low, high, lower low, break above. You will notice there was one catch here, and the one catch really killed was that at one point in this trade I was green, right? My entry was actually right off 50% of this breaker, right? So really turned out it was good to start, right? There was no imbalance formed after creating that breaker. That could have been red flag number one, right? Like we said before, when you get that imbalance in confluence with the breaker, to me, that's just offering a higher probability setup. Why? Kind of going back to the explanation I had before, where you have an order block, a block of bullish orders, right? Fair, right? If we were to go to a 4-hour time frame, you would probably notice this is one order block, okay? But in addition to this, not only did we take care of this order block, bullish order block, but we also created an imbalance too. So what is that really telling me? That's urgency, right? There's enough downside, quote unquote, pressure to not only satisfy a bullish order block, but also to create an imbalance in price in that range, right? That should be telling. That should have been telling to me. And again, it just wasn't looking. It was just a real bad miss, in my opinion. But anyways, you get your bounce, nothing doing. You get your retracement. This is where it kind of screwed me, and I gave back more than I should have. Right here. Here it is. So off of this breaker, in reality, my stop loss probably should have been pretty close to the bottom of the breaker, right? But I saw that we had this bullish imbalance here, and I was ultimately looking for one of those wick and go type situations, especially after getting into the imbalance. And we didn't get it, ultimately stopping me out of the trade. It is what it is. But what I'm more mad about, not about me losing in that situation, it's the fact that I really dropped the bag on this, because it really doesn't get much better setup than this, unfortunately. This is breaker. You get your retracement back into your breaker, and this is, this will actually build off into what I'm going to discuss next. But you get your breaker, boom, retracement back into it. There's your flush. Look at these relative equal lows. They're begging to get swept, right? So there's so much going on for that trade to be quote unquote highly probable for success, and it's just one that I missed, and it stinks. Green Day, nonetheless, happy with how it went, but still, when you miss out on those where there's so many things going in confluence, you kick yourself a little bit. And it was just a situation where maybe my focus wasn't exactly where it needed to be. I ended up going out to get food after it and everything like that, but to miss that hurts, especially as someone who, I'm would consider myself very seasoned in this. To miss that, it's a huge kick in the nuts. I gotta be honest. So, sucks. Missed it. Whatever. I'm gonna be. Actually, no, I'm not. I'm gonna stop being a baby about it right now, and leave it and move on to the next day. But I guess, if you were to have a bad day or a bad situation, harp on it for a little bit, see where you went wrong, kick it. You got to move on, right? Nobody cares. The market most definitely does not care if you're going to sit here and cry about a setup that you missed, right? There's going to be more. Now, the second thing that I wanted to talk about, following this breaker conversation, again, breakers, very, very strong to just throw in the back pocket. It might not be something that you want to continuously watch every single day, right? You might not see one every day, which is fine, right? But to just see them and be able to understand how price tends to react to them, it could be a killer, right? Because you might have not seen that breaker, which is fine, right? Even if you don't use the breaker, and you said, oh, look, the imbalance, it was great. Now think about this, right? If, God forbid, you were wrong and you took on a trade in this hourly fair value gap, right? What's your upside, or what's your risk, essentially? Well, what would make sense? High of the candle that created the imbalance. That's almost 1,000 points. I'm not risking 1,000 points. I don't know if you guys are, but I'm most definitely not risking 1,000 points. How can we be even more precise? Well, before even going to a smaller time frame, we can take a peek. There's your breaker. Okay, now look how much more in terms of risk we trimmed off by just identifying a breaker. And if you're going to use the breaker, you could literally just use that candle. So now we went from, I'm sorry, I said 1,000 points. I meant 100 points. Okay, but risking 100 points versus now I'm risking less than 30, right? What is this, 27 points? That sounds a lot more enticing, right? A lot more enticing to me, right? And look, there could be certain situations where I might, on a move like today, if this were to happen and say, I was dead set on having a bullish thesis, right? I had a bullish thesis. I thought there was going to be some sort of continuation, and whatever, go down whichever route you want with that. But you were really bullish, and you were just flat out wrong. That's a different story than this, where I, for one, as you all know at this point, have been saying this for a while, and this is something that I stick on. But when we get to those all-time highs, to me, it's anybody's game. I don't know when the big one's going to come, right? When that move to the downside is going to come. And I'm not trying to say that this is the top. Do not take it that way. This, to me, I don't think it is the top. But in this specific range, this specific price run, right, it would make sense for a bearish breaker x bearish fair value gap to be the creator of somewhat of a retracement. That's all I'm saying. And I had that in my mind, and that's why this one is, I wasn't exactly thinking breaker fair value gap. I was thinking, okay, it might be time for a retracement. But I was stubborn, and I wasn't currently looking at the hourly time frame, which I think I'm going to add a fourth box here to have my 1 minute, to have my 5, 15, and also the hourly, just on one chart. Because when I'm kind of aimless and not thinking about, I don't want to say thinking, but like when I'm not really focused and dead set on trying to find something, I just kind of leave it up, and I, sit around and don't look at much, and I'll just have that up in the background. But yeah, that one sucked, because this setup here, not many better than that. So that's just to cover today's PA, because again, a little frustrated, but it is what it is. I'm going to stop being a little brat right now and toughen up. So that's one. Two, I wanted to congratulate Pistol. I don't know if you're still here or not, but he's all the way in Germany. But I don't know if you're okay with me saying it, but hit a pretty impressive milestone in terms of his funding. So just want to give him a shout out. As a group collectively, I'm going back and count, because whenever you guys tell me that you pass, I write it down, and we have a fat number, and we're approaching a milestone as a group collectively. So that's also awesome. Now, yeah, I don't think you're gonna mind. He has his 10th funded account. So, and he started 2 months ago in here. So really impressive, awesome work. He's, put in more time than anybody. He's on right now. I don't even know what time it is. 6 hours, right? It's probably like 3 a.m. in Germany, and he's getting after it. So just really impressive that, and just goes to show that if you're willing to put in some time, you can get good at this. So that was just the second little blip. I got to get the exact number of everybody in the group. Everybody's got to shoot me a message how many, fundeds you got at this point, because I think we're pushing a pretty cool number. So with that, the last thing that I wanted to talk about, really, this will be shorter unless anybody has any more additional questions, and I'll look in the chat right now. I did the same on ES today, solid green, but missed the downside. Always another trade. Yep, exactly. Stinks. I'm just kicking myself extra, because I had a feeling that we were going to get some sort of retracement, and we got every possible sign, and I was just fixated on a smaller time frame. Also goes to show higher time frame trumps, Caught some nice range on shorts, but damn, I didn't think we'd go wild like that. Yeah, I know. That's actually a good thing that you bring up there, Ivan. And I guess it depends on what kind of a good kind of what's the word? I don't know. I guess lesson on where we can identify targets based on what our contracts like. So for example, I know Ivan hit a nice short on I don't know if it was SPX or Qs, but whatever it was, if he's trading a zero, right, a 0 day, right, honestly, like, he probably did exactly what I would have done and look for this low, take profit at that low, right? Now, if I had more time and I wasn't playing a 0 DTE, and maybe I had a couple days, maybe even 2 days, an extra day, maybe I say to myself, these relative equal lows are absolutely begging to get smoked, right? Maybe that's in your head, but when you're trading a 0 DTE, you're not really operating with all the time in the world. So even if you got a couple chop candles in here, you're toast. You could have gotten that sick move all correct, but if you're sitting in here chopping around, right, and you can't really anticipate that chop, that's the difficult part, right? And tends to be why I kind of avoid the zeros at this point. I did it for a long time, had some really, really good success, had some really, really bad losses, and it just wasn't sustainable. The roller coaster was way too up and down for me. So even when I first started to really, right, so even when I first started to learn the,
Right disco.
all right, I don't even know whose mic that is. All right, yeah, no. Sorry, I don't know if anybody else heard that, but
That was wild.
yeah, I lost my train of thought. Oh, going back to the idea that depending on what your contract is looking like, right? So Ivan, you smoked it. I'm sure you took near sell side, and fantastic, right? Because you can't really anticipate that potential for some chop, right? You don't necessarily know. with time, you could have said these relative equal lows are absolutely begging to get swept, which ultimately we did with some speed, right? And if you had more time on the contract, maybe, or maybe you just said, yeah, I'm good here. I'm happy with my profit. I don't want to hold this overnight anyways. And this was an end of the day move, really. It was, 1 o'clock, 2 o'clock move. Or no, not even really. It was here. Yeah. But nonetheless, I mean, it's just a way that you can kind of go about it, because I was actually talking to somebody earlier who was saying, dude, I'm like, buying these cons off the weekly. I'm going up 100, and then I'm seeing myself come back down, and then that kind of plays into, okay, well, if you're playing it on the weekly, you got to let this thing digest, right? You went up 100%, maybe take some off, maybe look to play their next retracement, right? You can manage around a core position. Let's say you buy 5 longs on something that you like for the Mando model completion on a weekly time frame. You got contracts 3 to 5 months out. You're feeling good. Great. Those contracts go up 100%. You might say to yourself, hey, might not be a bad time for me to take 3 off the board, look for the next retracement into discount, and from there, play it up, right? Over a weekly time frame, go look at any weekly time frame, and again, this comes from practice, but you'll notice that there are subtle retracements within that weekly setup, right? It's all fractal. While ultimately you could see the trajectory going up to complete the model, but on the smaller time frames, you're going to notice you're going to get these little daily or hourly retracements where those are still also very tradable. And if you can't tolerate, if it's not a set and forget, come back later, and you're really fixated on this, and you can't see 100 go to 0, then maybe don't trade that far out. Maybe just look at smaller time frame setups if you really want to get in and out. Or if you're looking from a weekly, then practice enough where you believe that it's going to play out the way you want it to on a higher time frame like that. So just all little tidbits in there. But that was point number 2, and now lastly, point number 3. Please go over the breaker as a stop loss again. Please zoom in. Sure. So here's your breaker. Okay, so here's your high, low of the sequence, higher high of the sequence. There's your break below the low of the sequence, and we would anticipate the low candle of that sequence to act as a resistance level moving forward, right? Again, just added layer of confidence, right? Not only do you have the imbalance, you also have a breaker. With that, you also trim about 100 points off the range of that breaker, right? Where should your stop loss be? Well, ideally, look, you looking at this from this perspective, could you get wicked out? If you're looking at it solely from an hourly, sure. But if we were to look at this hourly and come on down to, say, a 15-minute breaker, right? How could we, or an hourly, but look at it from a 15-minute perspective, we could even say to ourselves, okay, maybe here rather than just right above, right? Can we still justify a rejection up here? Sure, right? It's just a way for us to slowly but surely trim down what our downside potential is. Oh my God, this is a layup. 5-minute gap down at 9:40 in the morning. Bearish volume imbalance on a smaller time frame too. There were so many layers to this trade, and that's what frustrates me, that I missed it. It is what it is. It's okay. I'll live, as will everybody else. But it's just I think these types of situations where we can review what we're seeing. Of course, with hindsight, it's easy. But if you can't review it and for it to make sense for you in hindsight, then it's never going to make sense for you when it's time to push buttons, right? It's not. So I hope that was helpful there, Redshirt, on that breaker topic, because oftentimes those breakers will show you or indicate that it is time to reverse. Again, we actually had one down here. I think it might have been on a smaller time frame, but okay, low, whoops, high, lower low, break above, ting. Where's your breaker? The high of the sequence. I know this is a really big one, but bear with me. Price is in the breaker, takes off. Okay, so it just shows the efficacy, and oftentimes how these breakers are at a pretty important part of our specific range, or where we currently sit, right? So if we were in a, and this is something that I've not gone over this at all, because I think the ICT Twitter fanboys, they kind of overdo this with the market maker buy model versus sell model, blah, 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 whatever. But that's essentially what it was. Buy model, right? New heights, right? Breaker, retracement back into it. This is right here, right? If you like this and you say to yourself, damn, that looks clean, right? One, I'm going to make a video on it using the inverse, but even if you don't care for mine, just look up ICT's 2022 model. This is literally it. It's literally the same thing, right? I personally don't like that one because I feel like he does this with a lot of videos. He leaves out a lot of important context. So for example, if we haven't, he talks about the, shift in structure, retracement into a bearish fair value gap, look for lows, which is, essentially what mine would be as well, looking for that discount retracement. But he leaves out the fact that it's kind of important to note at least that we've taken out some sort of buy side liquidity prior to that. I don't know. Maybe you guys have heard it differently than me, but I think that's like an important ingredient to it, right? But yeah, so, but the 2022 model in itself, it's literally this right here. So, a lot of ways to skin it, really, but it's just a matter of what catches your eye the best, right? And over time, I'm sure many more things will catch your eye, right? So, for example, let's say you're making, or you're using, we won't even use one of mine. Let's say you're using the ICT Cameron's model, right? It's another one of the models that he has up there, and it's something that you've been using for a little bit. You're doing pretty well with it. All good, all great. But you start to say to yourself, wow, I'm really starting to identify these breakers well. Let me see if I can do something about this. And you go back and back test, see where these breakers are forming by just going back in time and seeing how they react on the chart, when they might be extremely highly probable versus when they might be lower probability, right? And the quick answer to that would be check your time frame and check where you are in a current range. But I'll leave it at that. But if you but that's just a way where you can over time incorporate other things into your own specific trading plan, right? So for me, it's my model would be what I'm using predominantly, but I have the London kill zone in my back pocket. I have the inverse odd nam as well, something that doesn't happen every day, right? Just in the back pocket if I need it. I feel comfortable enough where I've back tested it enough where it works. But I always know I have in my back pocket a model that I have the utmost confidence in. I've seen 1 million examples of it working on all different time frames. So if I have that in my back pocket, I feel great. There's no sweat for me, no stress. And I feel like I can, start to slowly incorporate other things. But I think it is really important to hammer home one. What do you see the best, right? Whether it's mine, whether it's somebody else's, what do you see the best? It resonates the best with you. And again, it just goes, this also goes back to, you might not see my model that well, right? I know a lot of you do. Some people might not, and that's all right. It's like the whole age old, like, oh, this guy, he learns better from this style, so he fits better with this teacher or this whatever. That happens, right? That's fine. It is what it is. You see guys, I use sports as an example. You see big league pitchers who, they're great prospects. They get to the big leagues, they struggle a little bit, they get traded or they sign with another team, and they take off, right? Sometimes you need that. Randy Johnson was one example. Max Scherzer, Diamondbacks. He was decent and wasn't a Hall of Famer, but all right.